Money in agriculture. We're continuing our theme, which we've discussed several times now on the business of agriculture. We talked about investment trends. Now we're talking about investors pouring into this space and what they're investing in and why. It's going to be a great episode of the business of agriculture. Are you looking for productive efficiencies and growing higher yielding, better performing crops? New Fields Ag provides a complete portfolio of biological products focused on you, the farmer. Visit newfieldsag.com for more information to help you farm better. Hey there, welcome to another fantastic episode of the Business of Agriculture. We're talking to Chris Rawley. He's with Harvest Returns. You know what's neat to me is that in the old days, there was traditional funding, and that's what we thought about, but there's so many different ways to build your business and get the capital you need. Chris Rawley's with Harvest Returns. They're one of my sponsors here at the Business of Agriculture. I said, hey, you know what? It'd be very educational. Bring on one of your clients, somebody that gets money through your company to build their business, and also one of your investors. He said, absolutely. So he did that. We got Bryan McGurk, who's an investor, client. He'll tell you what exactly he calls himself in the relationship with Harvest Returns. We also got Kevin Muno with a company called Perennial Pastures, and they've got other various companies that they get money through Harvest Returns for. When I read your stuff, Mr. Rawley, when I do your spots, I say 18,000 investors, a pool of 18,000 investors have put money into the Harvest Returns model, and you go out and find companies, or they find you and say, we need money. And it's not your basic ag first farm credit kind of thing, or your basic commercial or small regional bank that like lends for farming operating loans or mortgages. It's a different kind of a thing. And I sat in on one of your webinars with a beef entity out of Kansas, and it was a pitch. It was a pitch saying, here's what we do. We're trying to raise, this many hundreds or millions of dollars. And investors sat in on that. And then some of them said, boom, I'm in. So it's kind of like Shark Tank is fused with ag lending, is fused with venture capital. Hell, I don't know. What does Harvest Returns do?
Yeah, I mean, you nailed it. We started up in 2016. Essentially to put investors together with producers and agriculture businesses. We started out purely on the producer side, people coming in, equity investments, and we've expanded on to the debt. So we will do debt. It's a little different than traditional farm credit, ag credit, but we enable our investors, that pool of investors, to come in and invest whatever amount they'd like and put their money to work in this business. And those investors come to us. We'll hear from Bryan, but for a lot of reasons, and we can get into that. But it's mainly because they feel like they want a connection to agriculture with their money.
Yeah, and so I want to get into that. Then I want you to explain something. And I did this on one of my past ones. I had on a guy, and we talked about investment trends in ag. And I said, remembering that I've got really smart listeners, but the financial side of things, you start talking to investment bankers. I mean, they're talking about mezzanine investing and Series A's and B's, and it can be a little over the head of a lot of folks. They're even smart, successful folks. What are you? What are you? You're not traditional lending. You're not venture capital. What are you?
Yeah, we're kind of a mixed bag. So, first it's probably good to understand what is that whole taxonomy of ag investing. And at the very top, it's those institutional investors. This is like the LDS Church, which owns a lot of farmland. The Abu Dhabi Sovereign Wealth Fund, would a pension fund fit into institutional investors?
Pension
funds.
So the
university endowments.
The Michigan Teachers Retirement Fund could then have $600 million to deploy somewhere, and they're sticking it somewhere. Are they coming to you?
No, that's generally not who we work with. We're working with the smaller investors. So what you might call a retail, what I like to call high net worth, in some cases, ultra high net worth folks, small family offices that come and they invest with us anywhere between $5,000 to, multiple hundreds of thousands of dollars, either in a single deal or across multiple offerings. And, that's kind of, we pride ourselves as being like the one-stop shop for ag investing. So whether you're looking for, to invest in a cattle ranch, or we do have sort of a venture angel investing side where you can invest in early stage ag companies, ag tech companies as well.
So very different stuff. All right, Kevin, let's go to you, the company or companies that you have that you, okay, you're an owner, but not maybe the only owner. And obviously the investors are part owners. How's the thing work? Tell me about it from your perspective.
Yep. So we raised both equity and debt, and Chris and his group, through a pool of 13 investors, invested as one LLC as part of a group of investors into our deal. So we've raised $3.5 million so far in equity and some in debt. Our debt provider is also a regenerative agriculture kind of focused a debt company called Mad Capital. So we've put those two sides together, the equity and debt, and we've gone out and acquired a local cattle company and transitioned it from a conventional cow-calf operation. This was in 2020. And now we're here 5 years later in 2025, and we now have a direct-to-consumer regenerative meat business, a ranching side. We're going to be launching raw milk here shortly, and then we aggregate from a network of partner ranches that are all on their way or are ready, part of a regenerative certification called Returns, which we can get into. So we've kind of typical direct investing, Reg D kind of filings, all with accredited investors.
All right, and I want to get to Bryan as an accredited investor. Before I do, a few things for the listener. Okay, if you didn't listen to the one I did with Daniel Zelizik about investment trends, we did a thing. You just said equity and debt. I got a 22-year-old that's just getting out of college. They're working hard in this industry, and they're embarrassed to ask because they're like, oh, these financial things. What's the difference?
So equity, you're buying a security, a stock, typically in an
ownership
LLC.
in the company.
Ownership, yep. And then the debt is exactly that. It's leverage. It typically comes first, kind of in the payouts and capital stack, and then the equity investors get some sort of multiple, on their capital.
Debt means a loan, equity means ownership. So when you are talking about these brands, you're not operating the beef and the regenified beef business. You are an owner.
No, we are. Yeah. So we directly operate the underlying subsidiary. So we are selling the beef. We're raising the beef. We're also aggregating and buying the beef from other partner ranches too.
Got it. Fantastic.
Yeah.
So you've used Harvest Returns as a conduit to bring in investor monies.
Correct.
And you gave them two different options. Part of it was to be as a loan, and part of it was to be as an owner.
No, they're only. We were looking at some debt instruments with them. The timing just didn't work out, but currently just on the equity side right now.
Got it. Fantastic.
Yeah.
By the way, very busy backdrop there at Kevin's office. He's had a guy coming walking in off the beach in San Diego. He's got dogs. He's got a woman poking her head through the back. I don't know what the hell's happening out there. I mean, it's a beach party. It's a beach party in San Diego.
Yeah, I office out of my home, so this is my Great Dane Moose.
He's
just a puppy. Yeah, thank you.
All right. We're going to get to Bryan as the investor. Before I do that, is Kevin a typical type of a fit for you, Mr. Rawley?
Yeah, he is. When I think his company's much more mature now than when we started with him, but generally earlier stage companies, whether they're a producer or agribusiness, they're looking for expansion capital, what you might call small mid-market companies. We're not going to get Cargill's not going to come to us for an investment. The big ag companies, that there's other sources of capital. But if you're a producer that's trying to grow, expand, and in some cases startup, we'll work with you if you kind of meet our other criteria.
Why does a guy like Kevin not just use traditional financing? Why does he go to the bank and get $3.5 million?
Kevin, why don't you answer that one?
So it's a good question. I think banks are traditionally looking for more established companies. I think it's hard for a startup without any track record or time in business. So we were 4 months into our business when Chris and his Harvest Returns invested.
Yep.
So just earlier stage endeavors. I mean, we had some traction.
Did you have revenue? Did you at least have?
We were revenue. Product? Yeah, it wasn't pre-revenue. I think, and Chris can correct me if I'm wrong, but I think he rarely invests in pre-revenue stuff. I think it's a lot of folks that have gotten going already. But I think that was he was one of our early investors. So that was 4 years ago. So his model could have changed since then. But yeah, so we were, I want to say 6 months in, had some good traction, had a good business plan. We're in a growth industry. Regenerative agriculture is is definitely on the rise, and I believe here to stay. And so a lot of things kind of came together with that deal.
Bryan McGurk, you are an investor.
I am, yeah. I run my own capital and I allocate for a small family office. About 90% of what we do is in public markets, your traditional equities, fixed income. I both allocate and trade those securities directly, and then also allocate funds to other managers. About 10% of the portfolio is various types of venture investing. It's concentrated mostly in food. That's where my background is, and agriculture. Not exclusively, but I would say about 8 of that 10% is in various forms of agriculture and food businesses.
So really a small percent. You said it's your capital and one family office, your capital
Yep.
and multiple. Where's it all derived from?
One family office.
All right. Almost all of it is in traditional investments.
Yep.
Meaning like stuff that's Wall Street Journal stuff, right? Whatever.
The S&P, treasuries, gold,
Sure.
whatever. Yeah, all that kind of stuff.
I hope you bought your gold about a year ago. If you just bought it yesterday, you're probably buying it at the wrong time. But you know what? You're the investor around here, not me. I don't know. It just looks a little high right now.
No comment.
All right. So only 10% is going into this, and the old thing of, a certain percent of it into something that's a little bit off the radar or, off the reservation. And that's what you're doing here. So 10% of it goes the direction of places like Harvest Returns. You like food and ag because that's where you have a comfort or a background.
Yeah, absolutely. I come from a very big food family. My mom worked in the food business. I cook professionally. I went to culinary school. I've been fascinated with food production since I was a kid, all types. Aquaculture, traditional farming, orchards, the whole gamut. And it's something I've had a passion for researching for pretty much my entire life. So it does give me a little bit of familiarity, and also it's something, I like doing things that I'm passionate about, and agriculture and food is something I'm very passionate about.
Got it. I'm passionate about money also, which is why I'm going to talk to you about my sponsor. Besides Harvest Returns, our friends over at Redox Bionutrients. With a new growing season underway, the superior nutrition from my friends at Redox Bionutrients can make a major difference come harvest time. Redox provides carefully sourced nutrients that are combined with biostimulants that have been proven winners since the Moon family started a company 31 years ago. Darren Moon started this company 31 years ago, working in specialty crop. They moved into turf and now increasingly into broad acre. We're talking about new technology that can give you the same yield or more yield using less of the traditional, harsher synthetic stuff. We're talking about bioproducts, bionutrients like DiCap. DiCap provides unequaled stress defense. It increases your plant respiration and antioxidant production. It's also a fantastic source of potassium and phosphorus. You can find out more about DiCap and the rest of the Redox lineup at redoxgrows.com. That's redoxgrows.com. So why here? Why here? Is that 10%, Bryan, mostly sprinkled around through Harvest Returns, or is there somebody come to you that says, I've got a mushroom gravy business that needs some seed capital, and you flew into that? I mean, tell me how you go about deploying this, because it's a big world. There's a lot of options. There's lots of places to take your money.
Absolutely. There's no shortage of those. I would say it depends on the instrument. We've done some pretty significant allocations to the various forms of cattle-backed debt notes through the Harvest Returns platform, mostly because the yields they were offering were significantly above what you could get anywhere else in the market. And a lot of the risks that were embedded in that, just in terms of the health of the cattle, the price of the beef, like those are all things that you can mitigate through insurance, through futures. Like there's a little bit of an inefficiency in the market and an arbitrage that can kind of be exploited because, as Chris was saying, it's extremely bifurcated market. If you're not playing at the ultra institutional level, you don't necessarily have access to bank rate funding. Right. And it's pretty it's a lot more feasible to be paying out, yields in the 8 to 12% range, which I can tell you in the spring of 2020 was a very attractive yield. You were not getting that pretty much anywhere else.
Right.
So like, it really kind of depends on what the climate is. The smaller, early stage things have a lot more upside, obviously, higher risk, but so those are sort of sprinkled throughout. The more I would consider kind of bedrock portfolio pieces for us on agriculture tend to be on the fixed income side of things.
Brian, you remember that movie, It's a Wonderful Life, when they have that big meltdown at the savings and loan, and then George has to go and explain to the panicked townspeople, your money's not in this bank. Well, your money, it's over in George's house and in Bob's house. Is your money at Kevin Muno's house? Because if so, get some better locks on those damn doors. He's got people coming and going. I'm worried about his safety. Is your money at Kevin Muno's business?
Not currently. No, not currently. It's
maybe it should be though. Maybe it should.
It very well is something that we might look at. As you said, there's thousands of places to put your money, and there's so many opportunities and so much research that I have to do in the course of a given day that it's pretty difficult to make it to all of the opportunities that are attractive in my inbox at any one time.
Kevin, you didn't even I got the impression you didn't even really like my whole George Bailey, It's a Wonderful Life reference there about your money's not in, come on.
No, it's good. My son was watching Mary Poppins yesterday with my mom and daughter too, and I think there was a run on the bank at the end of that movie too as well. So must have been a theme in that era of film. But
yeah, and I'll tell you what, if you're Rawley's age and my age, you know what was a theme in about half the television shows? Quicksand. When I was a little kid growing up on a dairy farm in Indiana, I swear to God, I was convinced that if you got off the farm, you were going to sink in quicksand at about half the locales around the world.
That's funny.
As financing gotten more creative, it seems to me that, the point we're made with Brian, that there's a gazillion places to put your money. And this is a new thing to me. I guess, I didn't grow up with a lot. I wasn't from that sort of, family office type of background. And the older you get, the more you're around successful people, your career grows and you talk to people and they're like, yeah, we're grabbing our financing from here. And that's something that you would have not been even aware of at a certain time. It seems to me that it's almost like a democratization of the whole financial class. Like it's a good thing, I think. But Mr. Rawley, it creates some competition. Maybe it also creates opportunities. What's it look like out there?
Yeah, it's both, Damian, because so this whole space, whether it's agriculture, say timberland investments, gold, silver, real estate, oil and gas, it's called alternative investments. And that space has grown significantly and continues to grow pretty rapidly over the past 10 years or so. And there's some reasons for that. Back in 2012, there was this thing called the Jobs Act was passed, and it changed the rules where you could bring outside investors in that you didn't necessarily know. What's called accredited investors, they have to have a certain income or a certain level of wealth to invest, a certain level of sophistication is assumed. And that combined with technology, where, in the old days, you could probably get together with some golfing buddies and say, hey, let's go buy a piece of land and have a lawyer draw up the documents. Well, now we can do that all electronically with a bunch of strangers. And so that's definitely changed the world of alternative investing, including ag investing.
Hey, Kevin, I got a question. Well, first off, have you ever had any experience with quicksand there in Southern California?
No.
Mudslides? Mudslides?
Mudslides, yes. Definitely mudslides.
When we talk about the institutional, obviously, if you're to Chris's point, I'm the teachers retirement fund of Minneapolis or whatever. I've got a certain huge bunch of money. They're not going to invest in you and Perennial Pastures or whatever.
They will at some point.
They will at some point. Right.
That's where we're headed. Yeah, that's where we're headed.
Plain and simple, you have to give a greater amount of return to a guy like Brian because you don't have the track record that some boring investment would have that would get $300 million investment from, teachers' retirement accounts of California or whatever.
Correct. Yeah. Those earlier stage investors are taking more risk, more yield, and return on their capital is attributed to that. And later on, those institutional investors, I think we'd be targeting specifically for land deals, backed by that hard asset, and then they're getting some sort of yield off the land, that's super, super secure with a very stable operator.
Bryan, what do you look at? I mean, obviously, 90% of your stuff is just in almost, you'd call it a standard diversification, sounds like to me, right? I mean, they give you, this much money and you go through and say this percent here, 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 and here. It's that last 10% that has a lot of wiggle room. What are you looking for?
One of the biggest things.
First off, am I right? Am I right that
Yeah.
the last 10% is where all the rest of it's almost formulaic? Is that right? Like you say, most of this is going to be deployed this much percent here, 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 and here. It's almost plug in the formula, I think. Yes?
Pretty much. I mean, I do have a very high degree of discretion with the overall investment allocation decisions, probably a unusually high amount compared to most other family offices that I've talked to, which is great. The last 10%, really one of the things I'm looking for is non-correlation to the other 90%, because, stocks, bonds, commodities, they all have very specific, long established relationships over time. And, usually if you go back 100, years, you go back to the Great Depression, stocks go down, bonds go down, commodities go down. And if 90% of your portfolio is hurting, you need at least something that is not going to be tracking with that other 90%. And, maybe that's timber, maybe that's, real estate, maybe that's agriculture. And some of those things are often pitched as non-correlated. And in fact, they are pitched that way a little bit disingenuously. Like people will say that, real estate isn't correlated to public market returns. And it's like, put the 10-year yield at 6% and tell me that your private real estate deal's not correlated to that.
Yeah, by the way, that's bullshit. I mean, you're the expert around here, but trust me, these things all ebb and flow in a similar ocean, right?
Absolutely. And the more you can, it's all in the same ocean, as you said. That's a perfect metaphor. And I think the further you can get away from that other, 90% that might be very volatile and rocking around, the better off you're going to be. So agriculture, depending on how you format it, I think it can absolutely be one of those places.
Mr. Rawley, I not only like Bryan because of his praise for my metaphoric prose, but also that he's got some good stuff. This Muno guy, I don't know, man. I don't know. Jury's still out on this Muno guy.
Is he a rancher? Is he a farmer? Is he a business guy?
Beach guy, surfer dude.
Surfer. Well, I was a baseball player and I'm a first generation rancher. That's how I got into this deal, is eating grass-fed beef, playing for University of San Diego, and then got into the space. So I have no paradigms, which is what I like about this space. Because
All right, well, let's get into that. First off, all this thing about how hard it is to hop into agriculture. Playing baseball at a private school in Southern California doesn't exactly then connote with hopping into a regenified beef business. There's a lot. You passed go and maybe did or did not collect $200. Another metaphor for you, Bryan. Go ahead. Kind of not really. More of just a reference, but anyway, we'll go.
My grandpa was an entrepreneur. He was a sports agent. He was Joe Montana's sports agent. I always grew up thinking I was going to go into business for myself. In business school, which I went to at USD, they tell you to solve problems with entrepreneurship. Once I got into our food system, I saw that was probably the biggest problem in our world today was food, how people eat it, how they get into it, the nutrient density of it, how that impacts our health. Mm-hmm. And so I was like, I think, once I found it started with gardening and permaculture and then got into regenerative agriculture. And once I found that, I was like, this is what I want to do for the rest of my life, because it's a worthy career to spend your life doing. And this was in my early 20s. I'm 37 now. So, that's really my story. And I've been kind of on a evolution ever since. It's been about a 10-year journey for me. And we're excited to be where we're at right now because we have some serious traction in the marketplace. Regenerative is growing. There's not enough supply of it. There's massive demand for it. Companies like Whole Foods has called it the #1 trend within agriculture today. And we now know that our food is extremely lacking in nutrients. The greatest variation we've found so far, and I say we a bit pejoratively, it's a group, the Bionutrient Food Association, and Dan Kittredge's group, nonprofit group that studies nutrient density. They found in a spinach plant, in terms of antioxidant levels, that one spinach leaf had 365 more antioxidants. So it was a 365 to 1 ratio from antioxidants from one spinach leaf to the other. So that's just in spinach. They're doing it with beef and milk and all the other staple food crops. So it's super interesting as we, I don't want to get into the terms that you mentioned earlier that are going to get you, kicked off of YouTube or whatever. But this health movement that's happening in America today, it's at the foundation of it.
I agree. I've done a bunch on the whole nutrient density of food. In fact, next week's episode, we're going to talk about measuring that because in general, agriculture has gotten paid for pounds, bushels, gallons, not necessarily for what's in it, what's the contents. And so next week's episode, and by the time you're hearing this one, you'll have already heard that one, dear listener. By the way, if you're a listener, also become a viewer. We're building up the YouTube following. Just started it this winter. So go on YouTube, type in Damian Mason channel, hit subscribe. It doesn't cost anything. Really want to have you over there. You can also check out my great ag commentary. Been doing some really cool stuff. Some of my ag commentary I'm going to do wearing a Harvest Returns hat if I would ever get one sent to me. But in the meantime, I'm wearing my new Fields Ag stuff. Anyway, speaking of Harvest Returns, I want to go to my man, Chris Rawley. Ag's in a bit of a downturn. Does that matter to your investors? Because I'm out here in rural Indiana, and I know that we're talking about soybeans being produced for below price of production. Ag, we talk about Bryan. The ocean sometimes moves in the same direction, whether you're here or there. I could see it being bad, like people saying, "Hell, I don't want to be in there," or I can see people like Bryan saying, "You know what? The time to put in right now is when everybody's walking run, and maybe the time is to plow into agriculture in a more differentiated version, like Kevin's talking about." What are you seeing about the people that come to you with money? What about their mindset?
Yeah, it depends on how in touch they are with ag markets. I will say that most of our investments aren't super exposed to commodity pricing or their premium, like Kevin produces a premium product. So although I'm sure he's feeling the price of cattle being at record levels right now, he's also selling for a premium. So
this is not Kroger. He's not talking about Kroger hamburger, but
right.
But Kroger hamburger sets the floor that he goes above. And so if that's so high because the cow calf herd is as low it's been since 1961 in the United States of America, this adds cost to him. Yeah, there's margin, but also it takes a hell of a lot more money. I can see this being a little bit of a question among some of your investors.
Yeah, and it all comes down to the operator when we're talking on the production side and how well they are at hedging, or they've got risk mitigation, risk management features in place in their operation. And we've got some pretty sophisticated producers on the cattle side we work with that are able to understand the markets and buy when they can buy at the best price and sell when they can sell at the best price, and then hedge what they can't to make up the difference.
Hey, one nice thing on the cattle side, Damian, is that it's not necessarily linked to a ton of inputs. So a grass-fed producer could have a very low cost of production if they're scaled up and weather these storms. Essentially, I mean, the producers are doing great right now in terms of the live cattle market, but our whole model was a little bit on the vertical. We don't own the processing, but the producing and the marketing. I think there's huge potential in livestock agriculture, both on dairy and the beef side, because what we're learning in this regenerative space is you can manage thousands of heads with few full-time equivalents and have an extremely low cost of production, which is going to insulate you in whatever market that you're in, whether it's a downturn or upturn. So,
right. By the way, if you're listening to this and you're hearing Kevin speak about regenified and you're saying, where have I heard that term before? I was one of the first persons to put that out there. It was almost 3 years ago. I had on the folks from Diestel Ranch. It's a California turkey operation that actually talked a great deal about regenify. indigenified grain to feed the turkeys, et cetera, et cetera. It's because part of their value add chain, just like Kevin is speaking about. All right. I put question 8 in here, Bryan, just to see if it would rattle you, and I got no response at all, so it kind of bothers me. Question number 8, I put on here. Is this like Shark Tank TV, where these poor little business owners come in front of a bunch of rich pricks begging for money? You didn't even respond to that. Is that what it's like? Do you just sit over there with a bag of cash and say, "Dance for me, little business owner, and I'll decide whether I'm going to fund you"?
Generally not. It's
a funny visual. Would you at least give me? It's a funny visual.
It is, yeah, absolutely. A lot of like the pitch panels that you'll see in VC do kind of work that way. I think it's a format that is good for kind of
reality TV.
Well, it's certainly good for reality TV. I think it's also good for kind of getting people to a yes or no quickly, or tell me more. Particularly with a lot of founders. Ultimately, that's not how I look at things. I prefer to establish track records with people over a long period of time. My relationship with Chris and Harvest Returns is very much in that same model. After working investing with them for better part of 6 or 7 years, we increased our investment. Because I was able to see what they were doing and that they were executing and adapting to the climate as things have changed around us. So really, I'm looking for someone that's like Chris said, with it's all about the operators at the end of the day. People that are trustworthy, capable, and able to roll with the punches, as you will in any startup type environment.
I run my own little enterprise for 31 years, and I can tell you that when people say, "Oh, it'd be so neat to work," I said, "I've got this great idea." I said, "That's fantastic. How are your numbers?" "Well, I got this great idea." I said, "Great. Can you live for a year without taking a salary?" "Yeah, but I got this great idea." I said, "It's all cool, but it comes down." Am I right, Chris? Sometimes, first off, understand money. And also be able to go for a year without earning any money. There's all those things that I think the money discussion, okay, spend 5 minutes on your idea, and let's talk the next 55 minutes about the money. Do you do that with people that come to you?
100%. And we see that over and over. And who is our ideal, client or customer like Kevin? It's, probably established that they want expansion capital, although not always. We want somebody that's generated revenue, but it's very important to have not just the agronomy side down, but the business side. So we'll have people, "Hey, I'm a 5th generation cattle rancher." "Okay, cool. Send me your last year's P&L." And well, you'll get some hemming and hawing, and you'll get something scribbled on the back of a napkin. And I'm not questioning your bona fides as a rancher, but in order for people to put their money at risk with you, we're going to need to know that you understand your numbers, because if you don't understand your numbers, there's no way that we're going to be able to understand numbers when we project that out as a model for our investors.
Yeah. So, I mean, you've got people. Which one's harder to do? Is it harder for you to get Kevin, that is a client that uses your investors, or is it harder to get Bryan? It seems to me money's sloshing around everywhere, even if we're alleged downturn. It seems to me to be harder to get the businesses that are worthy of the financing, that have somebody that's sharp like Kevin here that says, "You know what, here's the package I can prepare, and here's what we can deliver, blah, blah." I think it'd be harder to get him than to get the money. No offense to Bryan, he's a smart kid, but there's a lot of money sloshing around, right?
Yeah, there is. And the answer to that question, it really depends on the cycle. Like, we've had cycles where investments was just pouring in, and then rates came up, and elections did what elections did, and even though that money is sloshing around or sitting in money markets or certificates of deposit, people call it dry powder, where it wasn't coming in as freely as the deal flow. People like Kevin, where we do have sophisticated people coming to us for money, and sometimes unsophisticated people that want to raise capital, and ideally we'll have the perfect balance between people that need capital and people that want to invest capital.
So the ideal investor, I mean, I'm guessing, okay, Brian's over here with a pool of money and looking, he's basically apportioning different places. What's the investor look like? Brian, do you think you're the normal investor to harvest returns? Do you think that maybe or you think you're the outlier?
Um, I think Chris would probably know that much better than I would. My guess is I have some overlap with a portion of his investors. I couldn't tell you how many as a percentage.
Yeah, that's accurate. The great thing is I know Brian. We've met in public, or we've had drinks together. We've known each other for several years now. Um, there are investors we've never heard of. They'll come on to the company, the platform, and they'll write $100,000 check, and we never had any kind of correspondence with them. So there is sort of an extreme, but I'll say, obviously, most of them, I think, have some sort of passion for food and agriculture,
Yeah.
or else they wouldn't be in the space, because there are so many choices. Even if you're talking the alternative investment space, a lot of them have sort of made a transition from other alternative investments like oil and gas or real estate, and then they find out that ag is even a thing you can invest in, and they discover us that way. That the whole allocation 10%, that's pretty common. Whether you're the Minneapolis Teacher Retirement Fund, or just somebody who likes alternatives, 5 to 15% is kind of the average range we hear for allocation into alternative investments, and sometimes a portion of that is in ag and ag related things.
Yeah, Brian, you said, you've got the food background. You're excited. You've been a professional chef, or you worked in food preparation, whatnot. Ag's kind of cool. It's kind of cool to be able to say, oh, there's this dude named Kevin, and he's got this regenified beef. It's cool right now. I don't think it was a decade or 20 ago. It seems to me we're riding a nice little wave right here. Is it got staying power?
I think so. To Kevin's point earlier, I think there are a lot of problems that do need to be solved in this space, both in terms of financing, in terms of resiliency, using less resources, being able to grow crops in climates that we haven't had to worry about before. I think agriculture has a lot of small pockets of very powerful disruption that happen. You can look at things like offshore aquaculture over the last 20 years. If you had invested in Baccafrost in 2012, you would have crushed the stock market.
Yeah.
That's probably not going to happen for the next 10 years because countries are looking at, offshore aquaculture and being like, we probably want to limit the number of salmon pens offshore because we're getting these horrible algae blooms or, these other environmental impacts.
The salmon get out and breed, and then all of a sudden you got cross-contamination. The one category that I got to tell you, I hope, maybe I shouldn't. I hope that Harvest Returns doesn't say, and a big part of our investor money is in indoor agriculture, because I can tell you that was the promised land 5 years ago. All of our food is going to be grown in an old warehouse on the outskirts of Cleveland. You'll never need lettuce from Yuma ever again. All your lettuce is going to come from an abandoned warehouse outside of Baltimore. I'm like, even lettuce doesn't want to be in Baltimore, for Christ's sakes. Trust me, this is not real. It's not going to happen. The indoor agriculture thing, I think gazillions of dollars got tossed into that, and they might as well just gone and dumped it with a bulldozer into a pit and burned it.
So actually, we got some scars and a couple of success stories from indoor ag. No matter how great that lettuce is and where it's produced, if it costs $17 to produce a head of lettuce, and you can only sell it for $4 a head, that's not a successful business. But we have seen some good investments in that. Controlled environment it's a big space, right? So there's like these large glass greenhouses that sort of originated in Europe, all the way down to like, I'm going to produce, lettuce in Manhattan. Maybe not the best business model, given labor and real estate costs and things like that. But we've got some experience in that space, and some of our investors have benefited from that.
You guys are all money guys, so I'm not going to give the investment advice. But hey, Brian, listen to me. buying greenhouses and indoor agriculture, it's like in Arizona, they say the best way to buy a pool is in the back of somebody's yard after their house gets foreclosed upon, because then the pool's basically free. That's the same deal with indoor agriculture. Just my observation. Okay.
If I can just push back just a tiny bit on that, I also have my own share of scars in CEA space. However, a lot of the activity that's going on there is not necessarily from an investment standpoint, but a strategic one. Saudi, Qatar are still putting large amounts of money into the space because they're going to need to have domestic onshore food production, that they don't have to worry about somebody getting, a freight ship through potentially a geopolitically hot area. So I think a lot of the technology is going to not necessarily shine commercially. I think these things will be around with us for a long time.
Well, if you got silly money, or if you want it to be because of food stability, because of problems in the Red Sea or something like that, you're talking about.
Right. We're in a pretty privileged position in America in a lot of respects. We have a lot of land, we have a lot of water, not a lot of hostile neighbors or anything of that kind of thing, anything of that sort. But there's a lot of places in the world that have hundreds of millions of people that they have to feed, where those things don't apply. And so ultimately, it's not necessarily going to be for them about how much can we sell a box of lettuce for. It's going to be about how can we feed the people that we have. And, money will be a secondary concern to that. So it's not necessarily, top of mind for investment, but I think it's also a technology, a format that is going to be with us for a long time.
Did you notice, Chris, how that worked? I was having a great bunch of merriment bashing on the whole promise of controlled environment agriculture, and then Bryan comes along and just says, oh, yeah, well, this. Anyway, we get it. I appreciate it.
Believe me, I have all of the same pushback on CEA as you do. I have been pitched those since probably 2015, and I said pretty much all of the same things that you did. But then I've seen over the last couple of years how things have been shifting and the washout that's occurred, and that the future of it just doesn't really look like what the sort of bubble and scarification period that we've experienced here.
So, by the way, we're talking to Harvest Returns. They're my sponsor here. They're good folks. I want to remind you that funding your agribusiness does not have to be hard. Your operation is unique, so why should you try to fit a square peg into a round hole with one-size-fits-all ag credit? Harvest Returns is here to help. Their guy right here, Chris Rawley, has 18,000 investors, people like Bryan McGurk, that can put their money deployed into your business, and everybody wins. You get growth. You get the capital you need. People like Bryan get the return that their clients or their own their own investments require. So you know what? Go to where do I go again? I go to harvestreturns.com, harvestreturns.com. All right, Mr. Kevin.
Yeah.
Brilliant entrepreneurs. I know some of these people had a great thing going, and they said, man, that was a lot. I got to capitalize. I got to 10 times this, 10x. That's a big thing, right? 10x
Sure,
this. I'm a 10x
10x.
this. And then you get an investor that says, you need to 10 to 100x this. And the reality is some businesses are only going to get so big. Some niches need to remain niches. The problem is you get investors that are in your bonnet telling you, go out there and get me more return. Do you feel that pressure? Do you feel that from the investors using somebody else's money? Are they making you dance?
We certainly don't feel it from our current group of investors. I mean, we didn't go out to investors advertising, 10x. I mean, 5x, 7x, yes. Although I do feel it like it is a 10x opportunity. The beauty of food is everybody eats, and it's a big space and it's a consumable, and you eat 3 times a day. And so there's so many things going on in the food system today, from grain finished versus grass finished beef, from, indoor agriculture versus grown in the soil, from farm raised fish to wild caught salmon, So I think that there's definitely a 10x opportunity in regenerative agriculture. We're seeing a resurgence to ancestral eating and, protein kind of coming back to the center of the plate. Talking about another industry that's been kind of scarred is the plant-based, movements of Impossible and Beyond.
That's not just a trend. It sucked. It's gross. It's disgusting.
Thank you for hitting it straight on the head. I'm trying to be, I guess, more I agree 100%. Obviously, because I produce just a natural product with.
Wait a minute, Brian. I hope this isn't one more thing we're going to disagree about. Don't tell
Just
me.
a tiny bit. Here's what I would say about the plant-based is if you look at what's available today versus what was available 10 or 20 years ago, a Boca burger or something like that, it is a giant leap forward. And a lot of the mycelium cultivated products that are out there are starting to really catch up in terms of both taste and texture, particularly things like chicken. There was like the cell growth agriculture where you're kind of growing a clone version of the animal in a controlled environment, and I think that's interesting. A lot of people have been doing it, but ultimately, where I've seen some really compelling products in the last couple of years is in the fermented stuff, where they're starting to get
I can go along with fermented. Don't even. You're comparing sauerkraut to some lab meat for crying out loud. Hey, by the way, did Chris not tell you? I'm a farm boy from the Midwest, red meat, and he's from Texas, and you're out here talking about the virtues of plant meat, Brian. Oh my!
I believe me, I eat quite a bit of meat. My fiance eats vegan, so I also eat a fair amount of vegan food, and I would consider myself a tough but fair judge of a lot of these products. And the stuff that I'm seeing with the fermented products is really starting to catch my attention. They're also just very efficient organisms compared to something like a cell-grown product that's just going to require a lot more energy and inputs to get to a final product. Mushrooms are some of the most efficient organisms on the face of the planet at the end of the day, and they can do a lot of things with a little tinkering.
You're kind of jumping the outline, which is fine. You went straight to no, that's fine. Where you see growth opportunity. As much as I am repulsed, I almost vomited a little bit in my mouth just at the very idea of you talking about plant-based meat. Anyway, but since we're talking about, you said where you see opportunity. You talked about fungus, mushroom. I've had the fermented food people. The fermented food folks have been on this show, and we talked about the growth in that category. So I guess we might as well stick with this. In food and agriculture, where do you, as Bryan McGurk, as a foodie and investor, where are we going? Where like something comes across your desk tomorrow, the next Kevin Muno, and you say, I'm in for 10 million. I'm in for $1 million. What is it?
So I think one of the strongest secular trends that we're going to see for a while is just the growth and consumption of animal protein. I love eating meat. A lot of people, billions of people, in fact, around the world are increasing their standard of living, joining the middle class, and that usually means they're buying a car, they're buying an air conditioner, and they're eating more meat every day. That is a very powerful tailwind. Any form of animal protein, I think, as long as it's a good operator and has a strong distribution network, is probably in decent shape. And that could be across the spectrum. It could be fish, it could be beef, it could be chicken, et cetera. Very, very constructive on increased protein, animal protein for certainly the foreseeable future. That's one of the big ones.
So this is where Brian sees growth. You're the entrepreneur, you're the business person. Is this working, this thing, Kevin? Okay, and not staying on the dietary trends and the projections, so I think we've covered that, and you've already talked about where you see things going, and I don't disagree. I mean, it'll grow to a certain size. Again, you're not going to supplant Walmart burger because there's always going to be a customer for $4.89, cheaper burger to a certain percentage. But I think the specialty, there's a value add sector that has room for growth to a certain level. Absolutely. Like you even said, it's not probably 100x, maybe not even 10x, whatever. Is there enough financial backing and interest to get you and a million more companies like yours going? The market looks like it's there. Is it?
Yeah. First of all,
what's the limiting factor? Market or money?
Yeah.
Which one's limiting?
So first of all, I think it is possible to have regenerative beef in Walmart at the price that makes sense for both the producer and the consumer. There's folks producing beef in Australia, 5,000 head to 2 full-time equivalents, and the cost of production is around 50 cents per pound of live weight and probably about $1 per pound of finished product. And so you can still sell four or five, although probably ground beef in Walmart these days is probably up $6 or $7 a pound. So you're still significant. So I see a future where regenerative agriculture becomes the norm because it's more profitable for the farmer and the rancher. There's less inputs. You're working with nature, and it's a product that at the end of the day, once even the Walmart buyer finds out about it, they're going to want it, So that's the first point.
There's a consumer trend, and the other thing that you could also argue is if we continue to get more productive on our existing cropland, marginal lands can continue to revert to something that is in a regenerative pasture type of a thing because we don't need as much corn, soy, whatever because of our productivity gains there. So I could see that. You made the money point. Speaking of the money, we got a marketplace here. Is there enough money to continue to fund ideas like Perennial Pasture?
I think so. I think once that we're in the early stage of the market maturing. I don't think we've jumped the chasm, so to speak, in terms of pioneers, early adopters, and then the chasm between the early adopters and the early majority. I think we're right there, and once we do, I think folks like myself who don't who haven't necessarily grown up in it, but have experiences elsewhere coming into it that can provide the maturity and some of the sophistication to talk to the folks like Bryan and like Chris. At the end of the day, it's going to be very interesting to watch. We have I think it's a $7 trillion equity gap, meaning farms are dilapidated. The pioneers, the OGs that came in, built the fences, dug the ditches, did all the things to improve American agriculture. Those improvements are all 70 to 80 years old. And we're going to have a massive shift in land ownership from boomers to my generation, millennials, or even the generation above mine. And so
should we expedite that? I mean, like Soylent Green kind of stuff. Should we set up buildings where we bring in boomers and just euthanize them? Because I think it's time, personally. I mean, guys like Rawley and I are Gen Xers, and we've been completely looked over, skipped over. Rawley, am I right about this? It's all been about boomers, millennials. They don't give a shit about Gen Xers like you and I. All we do is quietly plod along out here making money and doing our work.
Yeah, I mean, that is one shame, is that just agriculture and this is me speaking as first gen. It's very rare. Usually the business has to go bankrupt or there's got to be some extreme challenge for them to change. I mean, for better or for worse, there's a lot of great things I believe about tradition, but there's some bad things about it too. And the bad things is that you do not see the opportunities coming outside of your own ecosystem. And so I do agree that this acceleration needs to happen, but you're seeing it, and good ideas unlike 20, 30 years ago, travel so much faster today between avenues such as this, like podcasts and social media, and just so many opportunities to learn. I mean, I feel like my growth curve as an operator has been immense, over the last 10 years, and it wouldn't have been possible if we didn't have podcasts, YouTubes, all these people out there spreading the word. So I think it's going to happen fast. It's going to be a very dynamic and interesting space.
A little bit politically correct, Mr. Rawley. I called for the euthanization of the baby boom generation because I've been tired of hearing about it my whole life, and he just skipped right over it and started talking nice stuff again. Why don't you just go ahead, as a fellow Gen Xer, will you hop in on this, Mr. Rawley?
Maybe the solution needs to involve fermentation of some sort. I don't know.
Ink Bryan,
well done.
They don't know what it's like because these guys are younger than us. We've been overshadowed by the baby boomers our whole entire lives. It's all we had to hear about, and I'm tired of it.
Yeah.
No, it's good. I like low profile for our generation. I think we're getting skipped over in a lot of the power positions, and that's okay. It's good. It's good to be.
At least you
quiet.
don't get ragged on as much as millennials do. We just got stomped on
you guys aren't going to do many industries.
You're not going to do anything. You guys suck. You're bad business people.
Got stomped. You guys got maligned, and we got neglected. All right. Mr. Rawley, by the way, thanks for bringing a couple of good guests. I mean, I was a little concerned. Let's face it. You don't know who you're going to get into it. You didn't bring me a couple of duds. Both of them disagree with me multiple times, I might point out. And I appreciate that. Where do you see things going? You've got investors. It seems like you're doing that. We talked, Bryan's point, that when the ebb and flow goes a different direction, money might go away. Then again, ag might remain this cool, hot space. Ag and food, food equals health, the nutrient density. There could be the environmental play. We get rid of some of the things like obviously glyphosate and atrazine are on the chopping block. All of a sudden, we need more new concepts, more new advancement. It seems to me ag is still hot and should be here for a while. But what do you see from your perspective?
Yeah, I mean, on the production side, the technology side, I've heard your guests talk about it. We've got automation, labor challenges, automation to solve those challenges. The problem, the environmental side, biologicals, growth in biologicals, soil amendments, things like that. And then we're contrarians in a lot of ways in the space, in that we do like animal agriculture, and we do give an opportunity for people to invest in animal ag. And I, the growth of protein, 100% see that being a trend that we're not just bullish about, but we're excited about seeing more and more producers come online, try to solve some of the problems with the herd size over the next few years.
But you have no problem. You have no shortage of people coming to you wanting to invest in this space.
Well, we'll always take more investors. I'll never turn down somebody that says that's qualified and they want to invest.
Yeah, good. Are you excited? Are you still excited?
Yeah, 100%. This is there's always something new. I'm a first gen ag guy. Even though you can go back in my family far enough and find pioneers in Texas battling it out and with Comanches to try to grow crops. I'm new to this space. About 10 years in it. And, I've got people on my team that have been multiple generation farmers. And it's exciting because there is something new. And you learn something every day that you didn't know. And there's just a lot to learn in this space.
His name is Chris Rawley. The company's called Harvest Returns. They're one of my sponsors. I really appreciate them being a business partner. Go to harvestreturns.com if you want to learn more. Bryan McGurk and Kevin Muno joined us. Kevin Muno with a company called Perennial Pastures. He's in the West Coast. He's going to have to hop off this call, but we were done with this discussion anyway because it was a great one. Because you know what? We have great discussions here. More than 400 episodes have been aired of the business of agriculture. By the way, I'm kind of bragging. It puts me in the top 1% of podcasters to stay with it. It's more than just an audio platform. You can watch anywhere. Remember, it's a YouTube show. It's also on Acres TV. Go check out the video because you can see how good looking my guests are. Anyway, thank you so much for joining me. Share this with somebody that can benefit from it. If you have a great idea you'd like me to talk about here with some intelligent guests, that's what we do at the Business of Agriculture. Until next time, Kevin, thank you for being here. Bryan, thank you for being here. Mr. Rawley, thank you for being a supporter of this show and appreciate you bringing such great guests. Till next time, I'm Damian Mason, and this is the Business of Agriculture. Hey, sincere thanks for joining us here on another episode of the Business of Agriculture. I want to ask you, if you farm, are you looking for more productive efficiencies to grow higher yielding, better performing crops? Well, of course you are. New Fields Ag provides a complete portfolio of biological products focused on you, the farmer. If you want to learn more about the New Fields Ag product lineup, go to newfieldsag.com for information.